Coinbase is down 58% from its highs. The crypto market has been cut in half, and the stock just dropped 10% in a day on a stablecoin regulation scare. But this is also a company that just launched crypto-backed mortgages with Fannie Mae, built an AI agent payments toolkit, and has Goldman Sachs reaffirming a buy at $235. So which is it, dead money or generational dip? People still think Coinbase is just a crypto exchange. It's not anymore. Yes, trading is still the core $5.2 trillion in volume last year, up 156%. But the real story is everything else. Stablecoin revenue hit $1.34 billion in 2025. USDC's market cap just crossed $80 billion. Coinbase earns yield on every dollar sitting in USDC on its platform. That's recurring revenue that grows even when crypto prices crash. They just launched crypto-backed mortgages in partnership with Fannie Mae, the first time a government-backed mortgage agency has accepted crypto collateral. That's not a crypto gimmick. That's institutional integration into the American housing system. And then there's AgentKit, built with Cloudflare and World. It lets AI agents make verified transactions and micropayments on-chain. Coinbase is positioning itself as the payment infrastructure for the entire agentic AI economy. While everyone debates chatbots, Coinbase is building the financial rails AI agents will run on. Q4 earnings were mixed, revenue missed slightly, but the company still posted strong profitability. 3-year net income CAGR of 165%, 5-year CAGR of 216%, both in the top 10% of the entire industry. The SEC lawsuit was dismissed with prejudice. MiCA licensing secured in Europe, and the White House issued a strategic Bitcoin reserve executive order. CEO Brian Armstrong said regulatory clarity is finally arriving and Coinbase is positioned to capitalize. The company authorized a $2 billion share buyback in January. It's sitting on $11.3 billion in cash. Goldman Sachs has a buy at $235. Consensus target is $252. At $177 right now. That's 30 to 40% upside to consensus. Now the ugly side. The stock hit $444 in July. It's at $177 today, down 58%. If you bought at the IPO in 2021, your $1,000 is worth $541. That's worse than holding cash under your mattress. The Clarity Act proposed stablecoin legislation just rattled the market. If it passes in its current form, it could limit the yield Coinbase earns on USDC. $1.3 billion in stablecoin revenue is suddenly at risk. The stock dropped 10% in a single session on that headline alone. And the fundamental problem hasn't changed. Coinbase's revenue is still tightly correlated with crypto prices. When Bitcoin bleeds, Coinbase bleeds harder. It's had 51 moves of over 5% in the past year. This is not a stock for the faint of heart. So what's the chaos capital take? Coinbase at 177 is either the dip that looks obvious in hindsight or a knife that hasn't finished falling. It depends entirely on what happens to crypto. If Bitcoin recovers above 80,000, Coinbase's trading revenue surges, USDC grows, and the stock re-rates toward Goldman's 235 target. If crypto stays in a bear market and the Clarity Act kills stablecoin yields, this stock has more downside. The structural thesis is strong. SEC lawsuit gone. Fannie Mae partnership. AI agent payments. $80 billion in USDC. $2 billion buyback. $11 billion in cash. No other crypto company has this level of institutional integration. But at 40 times earnings in a crypto bear market, you need conviction. Size small. Watch the Clarity Act vote. And watch Bitcoin, because Coinbase's fate is still chained to Bitcoin's price. Everyone wants to own the on-ramp to crypto, but nobody wants to hold it when the market crashes. That's exactly when the best entry points appear. The capital markets are chaos. Embrace it, and I'll see you in the next video.